Hey everybody, it's Pete. Good morning. Welcome to today's episode of Stocks for Breakfast. Today's theme, today's story is we are really seeing the difference between trading and investing and how you can lose a small fortune when you confuse the two. It's a lot of people are writing in, a lot of people are emailing and comments about the difference between why is the market continuing to go up while the economic outlook looks horrible. And the bottom line is there's a difference between the two. The trading environment, which is what's going on right now, is a much faster reactive mechanism than the economy. The economy is not going to turn on a dime and start going down the same way that the stock market and the emotion of pushing prices up or down happens. The longer term economic data is that it's longer term, and it's more like a giant ship that has to turn as opposed to a news story coming out about a company and how fast that can push a stock up or down. So, for example, we have earnings right now. We'll get into a couple of earnings that are actually coming out today or scheduled to come out today. So the point that I want to make in reference to what we do and in reference to what I'm showing everybody to do, which is learning how to read the tape, is paying attention to what's going on right now and specifically paying attention to what's going on in the time frame that you trade. For me, I specifically use the daily charts for most of my ideas, regardless of whether it's a swing trade or a day trade. And I've mentioned this before, I just throw it out there again. Even if I'm day trading a stock, I want to day trade stocks that I would also swing trade in that same direction. Sure, you can catch the moves back and forth on an intraday basis. Absolutely. I'm not saying you can't do it. What I am saying is that it's exhausting. I have all this gray hair and I don't want to do it anymore. It's easier to find a direction in the longer term, and the longer term could be 5 days to a month to 3 months in our world, in our active trading world, and only trade in that direction until you see a reason not to. Any pullback in a strong stock, for argument's sake, is nothing more than a pause in the direction of that movement until it's not. And I know that's I know that sounds like an oxymoron, but it's not. Essentially, that means that you have to trade the order flow in that direction until it stops working. In other words, until it turns around and is no longer order flow in that direction. So the point that I'm making here is we're doing very well right now because we're paying attention to what is going on now as opposed to what might happen in the latter half of 2020 and possibly into 2021 with the economy. I think that anybody who believes that losing all of these jobs and all of these companies, specifically small businesses, that are closed right now, which if you've never owned a small business before, most small businesses are working on razor thin margins while times are good. While times are good. And if you don't believe that, ask anybody you know that's owned a business how much net profits there are in a general sense, especially if somebody owns a brick and mortar business. So I want to make it clear, we are trading price action by reading the tape. We are not forecasting. We're not projecting the economic forecast that we might see all over the place onto our short-term trading opinion. And the reason I'm saying that is I am getting emails, which is common when there's a distinction that's lost between these two things, of why is the market still going up when unemployment's through the roof, all these companies are closing, all of those various arguments. And the bottom line is the economy is not the stock market. It's not. They're two completely different vehicles. They're not the same. So hopefully you're absorbing the strength of what I'm trying to say is that we're not economic analysts here. We're traders. And traders mean that we pay attention to the most recent price action. And for us, that's within the last 3 months, within order flow, within the last 3 months. And then specifically what's going on right now from 1 week to the next, one day to the next, and taking advantage of that most immediate price action. So the point that I want to get across here is, if you find that you are projecting what you believe should be happening in the stock market right now based on economic news, have a separate account. Have a separate account where one is your longer term investing account, where you believe the market might be going a year from now, and then have a separate account for where you're only doing your short-term active trading, so that one account is not influencing the other, because they're different. I can't stress that enough. They're different. But on the upside, I'm seeing amazing feedback from people in our community right now who are excited about feeling like they have control over what they're watching when they go into the market. So that gets me really excited, because we're actually influencing the way you look at things, which is kind of cool, because as I said in the past, I'm doing this for so long now, I've already paid for the losses and the lessons of how to become a trader, and hopefully I'm passing those along to you right now. So the theme for today, which is, as we said, Tuesday, April 28th, is the market is continuing to go higher. We saw that yesterday. We're seeing it again in the pre-market today. Oil prices are falling again. That's a story that's not going to change, because that's an immediate supply-demand issue. There is oil or there's not, and cutting back and all the other stuff that's going on. We kind of saw a dead cat bounce last week, and we're falling again today in the oil market. So the theme, I guess, right now for stocks that are exploding, for lack of a better way of putting it, seems to be online retailers who are taking advantage of a situation that was dropped in their lap. They're not doing anything wrong. They're taking advantage of it. They're activating customers, so to speak, in marketing language, and they are seeing their stocks explode. Specifically, we're talking about Wayfair, Big Lots, ETSY, Chewy, stocks like that. Best Buy is not an online retailer, but that stock is breaking out as well, and we'll get to that in a minute. But anyway, pay attention to them. The only downside, and it doesn't really mean downside, the only thing to be careful with right now is not getting involved too late. Some of these have reached, I'll use a quote from, oh, what the heck was that? Spaceballs movie, where they've reached ludicrous speed. There's just no, Wayfair is up 500% off the lows. That's a big move, regardless of what's going on. Yesterday, they started running an 80% off sale on certain items heading into the end of the month, as you should as a business. That this is their environment. This is what they should be taking advantage of. But we're talking about trading. So the big blue line, the big green line is still pointing up on a lot of these stocks. You just need to be super disciplined if you're going to get involved with them on the long side at this late juncture in where they are. Now, again, we never want to say it's too high or too low, but we absolutely need to manage the downside, where a stock can have a $10, $15 pullback, which we saw in Shopify last week, where we noticed the exhaustion. The next day it opened higher, and it had a $109 turnaround to the downside. You don't want to get caught in that. So you need to have really flawless discipline if you're getting long some of these stocks late. And when I say late, I mean after these historic runs to the upside. You need to have discipline if you start to see profit taking, and specifically if we see large volume spikes in what we call exhaustion or cleanup prints, where maybe that order is done. And that might be happening right now. I'm not forecasting, I'm just giving you some food for thought. One of the reasons that the market is continuing, reasons, we don't necessarily trade the reasons why, but one of the reasons is the reopening of a lot of things across the country. Texas yesterday, Jerry in our coaching program had actually called it out yesterday in the room, opening the state basically. And here in Florida where I live, they're doing a lot of the same things, and that's being perceived as, okay, we're going to start getting back to normal. And the question is, if we start getting back to normal and retail stores start opening again, will that take the shine off of a lot of these companies that are online only businesses? I think the obvious answer is yes, but we'll probably get a little bit of an echo. So it's really just pay attention to what's going on if you happen to be long those stocks, and know how long you want to be long those stocks. And again, using a stock like Wayfair, a stock that's gone up 500%, I believe it was from $23 to yesterday in mid-March. I think it was March 19th. And yesterday it hit 130 something. So in a month. So I'm not saying not to be long those stocks. It's a question of, are you long from then where, and how long do you have a time frame for booking a profit? So we're going to go over to the charts. We're going to take a look at a couple of very, very quick news stories. But then actually, let me get into earnings that are scheduled for today. Today we have Merck, Pfizer, 3M, and UPS scheduled before the market opens. After the market closes, we have scheduled Google, Starbucks, and AMD. So a lot to actually pay attention to as well today. So we're going to get into the charts. Just keep in mind what we just said about when you get involved in some of these stocks that have had these really, really historic runs. I'm not saying not to get involved. I'm just saying be disciplined with when you do and as far as managing your profit potential. Dow futures, obviously, we just said are rising more. The crude oil story is still in play. Now, how is the crude oil story, which is a good question, how is the crude oil story different from what I just said about the economy? Crude oil is a commodity. It's in the field or it's not. There's either corn in the field or there's not. There's oil in the ground or there's not. And that has to be matched by an immediate supply or demand. The economy is not the immediate supply or demand. That is a much longer ship that has to go in one direction or the other, which is a good thing, by the way. So crude is different. Crude is actually the supply is still up, but the demand, for obvious reasons, has been dropped dramatically. So that's going to be something to keep in mind. I'm getting a lot of people asking me about how to take advantage of crude oil right now. Do you do it in airline stocks where you want to get long those as a longer term move? Or do you want to trade the outright futures contracts? If I was personally doing it, which I'm not giving anybody advice about trading commodities, it's a whole different animal from trading stocks. Right now, a crude oil contract 1 year out, which is crude oil expires the same way the E-mini S&P futures do and the S&P futures do. 1 year out, the margin as of yesterday, I believe, which was the the March contract of next year, was $5,400, if I'm not mistaken, somewhere in that level, $5,500. So that means to start the trade in that on one contract of crude oil 1 year out, if you want to get involved now while it's lower, and you think a year from now it's going to be higher, and you could sit among a possible downturn even from here, just to get started is $5,500. So you can do your own research on what it means to trade a commodity. That's a quick overview of how to take advantage of it or to get involved, not to take advantage of it. The other story, obviously, is we're advancing again, as I just said, on economies reopening right now. So the futures are up. We'll take a look at that in a second, and some stocks. This is an interesting story here on this article is calling it the Great Repression. And essentially, if you want to take a look on Market Watch, you can read the article. It's a opinion from an economist that basically says what's going to end up happening is the economy is going to start to take over eventually, and this bounce that we're experiencing right now is going to be short-lived because you can't hide the reality of what you're seeing here, which is an empty street. So again, I'm not giving you my opinion on one or the other. I am telling you, though, for a fact, we're trading the price action now. Right now, the price action is higher. From a trading perspective, longs are the opportunities we're looking for right now. If and when the market and price action in the tape tell us that has changed, we'll change our bias and start to trade in a different direction if it does. So just wanted to point that out because I think it's very important. I'm getting a ton of questions about the difference between the two. So here's where the E-mini S&P closed yesterday. So you can see we actually sold off a little bit, but here's where we are right now because the global markets, the story behind it right now is the global markets are starting to reopen and being perceived in the current market environment as bullish, further pushing us higher. So again, the obvious thing for us to do now is take a look at what does that mean in the main timeframes that we're watching. So the monthly charts, obviously, we're still going to be all inside candlesticks because of the monster drop in March. But you can see a very nice recovery, although an inside candlestick here in the SPY still. But the weekly charts just continue to remain big. We had this bullish U-turn, which traded into a bullish engulfing candle 5 weeks ago now, into well bid, inside candlestick, and breaking out again. Now, what's important to pay attention to today is this line in the sand here, which is 287.30. For me personally, that's going to be the line that I'm going to watch to determine whether or not we have a potential exhaustion move here to the upside. Not so much from where a volume spike, but where the market traded into an inside week last week. The daily candlesticks are littered with indecision candlesticks, small bodied candlesticks. Yesterday was a nice bounce, followed through on the gap, which is good to see. But I'm going to monitor it. I'm going to have an alert set for this high right here, despite the fact that we broke it here, I want to see if we stay above that level. So the level and the line in the sand to the downside, that's going to tell me that what we're experiencing yesterday and this morning has to hold that level in order for us to validate new higher levels, which you can see here clearly. We make money when we reach new levels, right? So 287.30 is the number you want to write down to pay attention to. Do we hold the breakout or fail? And as of right now, we're holding it. So again, that's just some solid tape reading stuff. So what we're going to do now is we're going to take a look at some of those stocks. And actually, Wayfair is one, just to give you an idea of the impact of that stock and what it's actually done. You can see here on March 19th, the closing price was $23.52. And yesterday, it reached as high as $134.80. That is just amazing. Good for them as a company, but for us as a trader, you have to ask yourself, where is the right spot to manage risk? So that means you got to really drill down and determine, can you handle a stock that can have a $20 reversal intraday, if not more, if the stock finally shows a little bit of profit taking. Because if you think about it, the 50% retracement level here is the difference between 135 and 23. That's all the way down in here. That's a big retracement. So if the market and that story we just saw is the turnaround where we're starting to see retail open, how is it going to affect these stocks? Project a theory on that and then pay attention to how it's unfolding. Ultimately, the price action is the only thing that matters really, because that's where we're managing risk and leverage. So anyway, Wayfair on the long side, I still like the long as long as you could manage your risk on the trade. That's a big deal. Same thing with Big, but Big's a little bit different. Big is actually just now breaking out. It doesn't have the same monster move. And again, this is a 13% move. Yes, they ultimately finished at 11%. So what's different about this is that it's not a straight up move that's overextended. We actually did have a gap here and it's holding. So I still like the long here. And you can see we have some room to go up to the 28, 29 level, roughly $6 or $7, depending on where you're looking to get involved there. ETSY is another one that fits that same category. This one, if I'm not mistaken, coming into some pretty big resistance here. So again, this is the power of looking at multiple time frames. ETSY absolutely is a long. I like yesterday's gap. I like yesterday's follow through, but we got some resistance here, which is why you saw it start to pull back. So I like ETSY as a new trade on a pause above 70, not necessarily initiating a new trade today. If we get above that level and you're already long, awesome. Me personally, I'm going to wait. One that we've been watching for a while is Chewy. There's a lot of dogs eating at home. We had a really nice push, pause, and another push to the upside. Chewy to me is a little bit more of a swing trade. It's not necessarily a day trade. You can see the melted candlesticks not leading to some consistent price action. Next one, we have DDOG, Datadog. Also, really good volume spike yesterday with some room to go. I like this. The only thing about this one now is if you're familiar with what we've covered recently as saturation plays, today is actually going to be a sell short day where if we open higher and push higher, I'd be expecting some profit taking to come in. So I'd actually rather have a lower opening in DDOG today and then look for a bounce for maybe another day or two. Hopefully you got the next one because we called it out yesterday. Sienna actually gave us a really solid day. We actually said above the 47 level was the target that we were looking to get involved. You can see we got through there right away on the open on the gap, and we got some nice follow through both in the morning and in the afternoon. And actually what's interesting is we've discussed this. If you're a day trader, we discussed yesterday buying the first pullback after a stock makes a rocket move out of the open. And then in the afternoon around 2 o'clock is when you should start to look for that same thing to reestablish itself and hit those same highs, if not make new highs. And you can see actually here 145 is actually when we got that nice move back up to the upside. So a good day trading lesson there of when to get involved. So hopefully you took the Sienna trade that we called out yesterday. The next one, BBY, Best Buy, very similar to what we looked at in Big Lots before. So we do have some room to go, maybe a little pause here in the $80 level. I do like the fact that we are now well bid 3 days in a row. But similar to what we just said about D-Dog before, I would actually prefer a lower opening to bid as opposed to a higher opening. I don't want to be at the end of this 4-day momentum move to the upside. So you can place a limit order below the market to look for that entry. Another one that we called out yesterday was Lulu. Really, really solid intraday price action in Lulu yesterday. Just kept grinding higher pretty much the entire day. So what about Lulu today? What are we looking at? Well, we got to stay above this resistance level here around 230. So if you're already long, if you took the long yesterday and you held it 230 as the resistance level, probably looking for a pause there before we make the next move to the upside. Z actually has a nice breakout above 44. I'm not getting involved here because you can see 1, 2, 3, 4 times it got above 42, 43. It pulled back in. So I want to see it close above 44. You got some room to go there as well. And a lower price one that actually was in play yesterday, very similar to chart that we just looked at, is PEN. And I'll show you what the chart looked like yesterday to give you some impact. This is what it looked like out of the gate yesterday. So we just kind of consolidated the rest of the day. But on that daily chart, if you look for something a little bit less expensive, again, in the chat room yesterday, we were all over the casino stocks and the price action. You can see that they sold off and they're still in that range, but they actually had some good buying and good volume yesterday as well. And you can see Win actually finally got out of that trading range. So the story of the day, the theme of the day is we're seeing some reopenings. How is that going to affect online retailers? How is that going to affect actual retailers? And the casino stocks seem to have bounced. Maybe that's with the world getting back to normal. Will that also affect where people start bottom fishing airlines and possibly bottom fishing cruise lines, as again, as a much longer term position trade where you hold it maybe 6 months to a year? Is this the right time to start doing that before they bounce, if we, in fact, we are getting to the point where we start to reopen? And you want to get those at a bargain price if you believe that those are the bottom. So covered a lot today. We got some big earnings today. We got some good stocks breaking out. Let's see if Win follows through again today. Let's see if LVS has some follow through as well and stays outside of that range. These online retailers have been on fire. It's a question of paying attention to whether or not we start getting back to the real world and has this shine come off of them. And I guess you could actually say Netflix in that same vein, because they've been obviously having massive subscriber growth, and they actually announced that during earnings last week that it was temporary because everybody's home and binging like crazy. So subscriber rates are going up. Does that also affect Netflix if people start are able to go outside? And able and should you is not the same thing. And how will that affect some of the stocks? So good stories to pay attention to start building arguments for some of those trades. So I'm Pete Renzulli. Thanks so much for watching Stocks for Breakfast with me today. If you enjoyed the video, absolutely please click down and subscribe. Have an awesome day. Be safe, and let's make some money today. Take care, everybody.